All right, well, hello everyone. Good morning. Welcome to our fiscal year end meeting for 2026. We are going to be covering USAS and inventory this morning. My name is Amanda. I'm going to be going through everything. And we'll start off by taking a look where the documentation is. But as always, we are recording the session. So if you need to go back to any points in the meeting, that will be available. As always, too, if you have questions, please let me know. I have my chat open, or you're welcome to unmute and ask a question if something comes up. I will say that this year, USAS, not a lot of changes. The presentation and everything is pretty consistent. So we'll talk through that. But inventory, we did make some changes. So we tried to, I did some cleanup to that checklist, trying to add some things to help, just with balancing and kind of where we're at now with what goes on with the inventory closing. So we'll see some changes there. So just a heads up for that one, since I know, some years we have changes, some years we don't. So, all right. Okay, so where we're going to go for our fiscal year end materials, I'm just starting on our homepage here on the wiki, and we have this SSDT meetings and trainings page. And on this page, we have the section for the year-end meeting materials right here. Now, we previously had these in like sort of one landing page, how the calendar year-end one looks right now. But what we're finding is as time goes on, we kind of have more and more, that was getting kind of cluttered on this page. So we separated these out so that USAS, USPS, inventory all has its own page. Once we come in here, though, this is going to look consistent with how it's looked in previous years. This is the same information, which kind of split the pages. And if you have the sidebar open here, you can see each of those pages under the year-end meeting section too. So just a little change, and especially if maybe this was something that you had bookmarked, good to know these pages are sort of new. So what we're seeing here is this is just where we kind of organize the links and everything for what we have for fiscal year end. Um, we have the presentation, which we're going to talk through today. The generic closing procedures. So this is our fiscal year end checklist that we have on the website in the user manual appendix, and we'll take a quick look at that. But our presentation basically goes through those steps. And then we have some supporting documentation linked. So these things don't necessarily like change year to year. You'll see some of these we just have linked out here from previous years, but we keep those links there, just as like an easy reference for what you may need for fiscal year end. So we have the AOS manual, the most updated version linked out here as well. All right. So with that, so if you were to click on the presentation, I have it open here so I can have it zoomed in right and stuff. Let's see. We have our PowerPoint, and then I guess let me just open the checklist real quick now because we'll take a look. And then here's the checklist. So again, it's in the appendix of the user manual. USAS fiscal year end checklist, and this sort of just goes through the steps in a format where you could check these. Now, of course, this is, we have it noted, this is like our generic checklist. We sort of put together the basic steps. And then, at the ITC, you may have, a checklist that's more custom to like your districts. But this at least is a starting point. So, okay, so let's talk through this then. Generic fiscal year and closing procedures 2026. And our first slide is talking about that page we just looked at. So this is just your reference to where those year-end meeting materials are. There are a couple of things that we have listed you can start considering prior to fiscal year end. We have it noted, obviously, district policies and procedures will vary. But we have a couple of helpful pieces of the documentation linked here. So first, closing out all possible purchase orders. So that's something the district is likely working on right now, closing any purchase orders that they don't need the remainder of the encumbrances on. so that they don't have, that they don't have that carryover, if they don't need to carry over the encumbrances to the next year, they may close those. So this links to our FAQ with the section that has information about closing purchase orders, whether they've been paid on before or not, the different processes there, excuse me. Review old outstanding disbursements. I left this one on here, but I don't know how common this is anymore. There were, I think back kind of from migration, there were like some statuses on like old disbursements where they may still show outstanding, and maybe they were like old memo checks or something. So we had a process to clean those up. If that's something that may be reviewed at this time, we have the FAQ linked. Um, Adding customizing monthly report bundles. So, I know a lot of districts do have these set up already. But if you have any districts that may want to set something up to have like monthly reports go out, maybe to their, building leads or, the heads of departments, and they can use those custom bundles to do that. So each time they close a month, close a posting period, it'll trigger those report bundles to send. So it's fiscal year end, a new fiscal year is starting. That may be something that they want to look at setting up and having, set for the next year. Um, and then the last thing we have linked on here is the maintenance of effort. So we have a budget summary MOE version, and that uses, we have a specific filter, SSDT MOE. And so this report can be used to review the specific accounts associated with maintenance of effort. So why is this important? Prior to funding, DEW annually compares the district's local or state and local expenditures to ensure that the district budgets and expends at least the same amount as the funds of the previous year. This is something that can get flagged like when they report their financials, the state will look at this. So it can be helpful at this point in the year to review that while they still can maybe move expenses and update those accounts before they close their year, before they're reported to EMIS. So this can be a really good thing to review, specifically at this point, sort of, pre-closing. And that filter is in USAS by default for all districts. They can use it. The budget summary report, the budget summary MOE version is a version of the report that is in there, but the filter is also available to be used on any report they want. So if they wanted to instead maybe run like a financial detail report and use the account filter, it would be there. So they could use it on another report as well. All right, so then we get to our official like pre-closing procedures here that we have on the list. And the first thing is sort of a step to verify data. So we're going to talk about verifying the district and building information, making sure their accounts are valid, and reviewing the OPUs for the district. After that is when they would prepare the budgets and revenue estimates. Actually, honestly, I shouldn't say after that. They could be doing budgets ahead of time. They don't have to, do necessarily district and building information before they do budgets. So, and then preparing requisitions for next fiscal year. That step, they would need to have a couple things in place before they can enter requisitions to July, but we will talk about that. All right. So the first thing we're looking at is organization detail, and let's hop in. Let's look at this in the software just so that we aren't just in PowerPoint land here. All right, so where we're going is going to be the core menu, and this is the organization page. Probably not here often. This is something that was probably set up, at the start, and then maybe something that you double check this time of year every year. But this just gives us our basic organization name, address information, phone number, that sort of thing. The important thing here, let me double check, is yes. So the central office square footage is what's looked at. This gets pulled out in the EMIS with the EMIS information, the EMIS extract, I believe. So this right here is what you're double checking. The ITC IRN, that used to be pulled. It's not anymore. So this is really just a reference field, but we have it listed on the presentation as because it used to be, which is noted. But yeah, central office square footage year to year probably doesn't change. If you have any districts, maybe they got a new central office. And so, I'm sure that they weren't running to their organization screen to update that when they did. So this would be the time to double check and make sure that's accurate. Next, we have the building profiles. So this is going to be under your periodic menu. And periodic building profiles. So, again, another one where this is likely entered and doesn't need changed often, but it is relevant for the EMIS extract information. So, you'll want to, just review this as a pre-closing step. And basically, each, building that the district has would have an entry here, would have a building profile. And this lists their IRN, a description of the building, the square footage, and then we have the transportation percentage and the lunchroom percentage. And the important thing about those percentages is that when I look at all of my entries together, when I have all of my buildings, they need to add up to 100. So, here we have 25 and 25 is 50, and then 30 plus 20, that's 100. So these should all equal 100% across the buildings that are entered. Um, there is also a report for this. So if that's something that instead of looking at the grid, they may want to review as a report district building information, we could do it that way. Maybe that's something that as part of your close, like you want to save a copy of just so you know, hey, here's what it was at that point in time. Um, Let me zoom in a little bit. So very simple report, but that just sort of gives you the information that's entered to that page. Okay. And there's our report. The other report that we want to look at, and especially, I know that there's been a ton of AOS changes. Some of we have the updates from AOS that came out as well, with some of the date changes. But I know everybody's sort of reviewing their accounts, and there are some that may pop up as no longer valid. And so we have a report that will help show any accounts that they may need to change for this year. So this is the SSDT account validation report. And if we generate this, this is pretty simple on the options, but this has, I can exclude accounts with zero amounts. And so I'm going to say true to that because when I go to report for my financials, it's looking at accounts specifically with amounts in it. So here, we definitely need to make sure that we change anything that has activity. You can review this for all accounts if there's other things you want to review as well, but this specifically is going to help identify accounts you need to definitely change. So let me generate this. And let me see, let's hop back while it's generating. So we have a note in here, ensures district has no invalid account dimensions prior to using the data collector to check for level 1/2 errors. So if they do not, if you don't, if you don't clean up everything that's on this report, when you get to the data collector, if there are codes, like account codes that they've used that are no longer valid, they will get a validation error there. So it will direct back to let them know. This is sort of a pre-step that you can do in USAS to clean those up now to prevent, getting those flagged later, essentially. I have some examples of the EMIS errors. So we may get like not a valid fund, function, or object code. This one, sometimes the code is not at a valid level of detail. So certain codes have certain restrictions where Um, it may need to be a similar code, but a little bit more detailed. So instead of like ending in a zero, it may need to be one of the accounts that a similar code. So here's what our report looks like for our test instance, and I just have a couple here, a couple revenue accounts. But what I have on this one, so receipt code 1820 is invalid after 6/30/2025. We did update last year when we sort of updated a bit, with the ongoing code changes with AOS, we updated these to have this like invalid after date so that you know. So this helps flag these. So these receipt codes, so this part specifically of the code, is no longer to be used after 6/30/25. Now, that seems like a really long time ago. I know that we're coming up on 6/30/26 when we're talking about fiscal year end. But what you can do to update these is, and I think I have it on the slide, so I should get here, is any account with the validation errors in the reporting fiscal year, they must be cleaned up using account change under utilities. And so when I'm looking at, this account being invalid back to 6/30/2025, well, what I would do is I can go enter an account change. And when I enter my account change, here, let's go look at that. When I enter my account change, I have starting fiscal year here. So when I make my change, I'm going to choose the change for fiscal year 26. And what account change is going to do is it's going to go update any transactions, any amounts for that account for this entire fiscal year, which is back to 7/1/2025. And so if I do the account change, as long as I do the account change for fiscal year 26, then I would be able to, have no activity after 6/30/25. So, um, yeah, I just wanted to talk through that because I mean it makes sense with the count change, but I feel like when I saw that date on this report, I'm like, okay, wait a second, 25. But yeah, you're doing the account change back to the start of the fiscal year. So that's how you clean these up. And basically what you do is just go look to find, a valid, receipt code that you'd want to change this account to. The account needs to be created with the regular account change first, and then, you can enter in the from and to account and process that change. All right. The other one, and this has a report too, is to review under the core menu, or by running the OPU report. And basically, we're just verifying the OPUs. So, again, this is something that I'm sure does not change very often, but will affect the EMIS reporting. So it's a good thing to review at this point in the year. But the OPUs part of the account codes, but they are district defined. So um, this is good to review these. Each of the OPUs should have an IRN associated with the, a district building. Um, let's go look at the report, which kind of like the building report will be similar here. So SSDT OPU listing, and I can just generate this for all. And so we could kind of just check through here and make sure that, these are all set to, how we'd want them. So the OPU of 00 would be the district IRN. All of the OPUs must have an IRN defined within the district, so it must be like a valid IRN for a district building. And then there is the checkbox to designate like OPU for central office would be marked as central office. Okay, let me close a couple things here. We've got all these reports open. So the next step then, hang on, let me go back to here. All right, so we've made it through step five. See, we're kind of going through the same steps of the checklist in our presentation. Um, so the next step to talk about is budgeting. And so for this, use budgeting scenarios option, enter the next year proposed budgets and revenue estimates. And I have a slide on this, but this is, not not so simple as just a bullet point on the list here. We did our budgeting training in February. That recording is out there. That budgeting process has a bit more to it. So we have the scenario steps for creating proposed amounts for the budget for next fiscal year. So this is the part where, they would, as part of like the fiscal year end process, also get their budgeting set for next year, apply those amounts out there so that they're ready for 7/1, so that when we proceed in our checklist and we, flip over to the new fiscal year, those budgets are there. I did also talk about on the budgeting recording, on the budgeting training that is recorded, a scenario where I know a lot of people are trying to get those new special cost centers set in the general fund. And so for the next year, like they can create those accounts and they can budget to them, start using them next year. Um, so that's something, to note. And I mean, just really any accounts that they need to start using in the next year. It doesn't have to be it can work for other scenarios than just those new general fund special cost centers is what I mean. So that's definitely helpful to check out for the budgeting. But yeah, this step is just sort of, that budgeting happens. That budgeting needs to happen as part of this process as well. So here's your step for that. And then you can prepare requisitions, optional, but requisitions can be entered for July 2026. In order for that to happen, the posting period must be open for July. July 2026 does not need to be current, so you still can be, June is your current period, so you're still like viewing all your totals as of June. But July would need to be out there and open in order to post, requisitions with a 7/1 date or later. Um, the other thing that can be relevant here, we were just talked through the budgeting section, but technically, the budgeting, like they can pre-post that out there for July 1. If they really, some districts may wait until July and then just like post it, post their budgets when they get there. A lot of times they will post it out there um, as the budgets for July 1, and they'll have the amounts in their proposed amount grid because that's their next year proposed. And a lot of times the purpose of that and getting to a certain step is because they want to have the budgets out there. We have an option in our software to compare against like the next year proposed budgets. I believe some third parties as well use that next year proposed figure for districts that then want to enter future year requisitions. So they're still at the end of fiscal year 26, but they want to enter them out there, for 7/1 of July, or any time in July, honestly, would be fine. And then it needs to check against that next year budget. So with, entering requisitions or really future year transactions, that is an option. But there just may be a couple steps that need to be completed first. So specifically, July just needs to exist and be open. All right. So that covers our pre-closing procedures. And then we get to month-end closing. So this is where they would go through, enter any transactions for the current month. This is sort of their regular processing, right? Attempt to reconcile USAS records with your bank. So perform the bank reconciliation. Under the periodic menu, select cash reconciliation to enter your cash reconciliation information for the month. I believe we're coming back to this. I believe we'll come back to this step when we talk about the fiscal year end procedures. But I think it's my understanding is, some districts do cash reconciliation every month, some do not. So yeah, let me not get ahead of myself there. Generate the SSDT cash summary report and the SSDT financial detail report. The detail report may be run for the month in order to compare month-to-date totals on the cash summary for June, and then the totals should match. So what you're doing with this step is the cash summary is giving you the totals, it's compiling totals from the accounts. So it's going to give you the cash account. Here's how much was expended. Here's how much was received on your cash account side. And then the financial detail is giving you the representation of the transaction side. So let me list out all of the transactions, within my time frame. So you would either run that, you can run it for the month or for the fiscal year. And that would show you what adds up, like all the expenses added up and all the receipts, or received amounts rather, added up. And then those two should match. So like, hey, where my accounts are stamped with the total versus where my transactions all add up to is in balance. And if the totals agree, you're balanced and can proceed. And so that's the month end closing. The monthly reports, they can manually run and review any reports, that they would like to. Of course, the monthly reports archive will automatically, the monthly bundle will run when they close their period. We do have a note, let's see. Wait until the bundle is completed before closing another month. And then, so this is just, this one I believe is specific to, some districts may have multiple, they don't close like month to month. If you have multiple that are open that need closed, it's good not to just go through and close all of them, because a bundle is processing each time you close. And then the reports can be viewed under utilities document storage, if they have been migrated to use document storage, or file archive if they have not yet. If you don't want a bundle to run for closing the posting period, you can disable that under the report bundle page. So we have that noted as well. And yeah, those are basically your month-end closing steps. So then we're on to talk about some things specific to fiscal year-end closing before actually closing up that period. And this is where we're going to talk about the cash reconciliation again. So it's on the monthly checklist. Like I said, some districts do process it for each month. But even if they don't, they do need to at least add one for June. So this is going to be under your periodic menu, cash reconciliation, and they can create one in here, posting period June, and enter in, amounts in each section. It has the total fund balance here that they would want this to balance to. And this goes with the EMIS reporting. So that's why they have to enter it for June, even if it's not something that they normally would do. If they have one in here from last month or last year, they can copy these to make it a little bit easier to enter. So that is certainly an option. The other thing is civil proceedings. So again, also on the periodic menu here, we have civil proceedings. And so if they have information to enter here related to civil proceedings that they need to report, they would be able to enter these in here. Each one of these is associated with a fiscal year. So, enter the current fiscal year for the ones that need to be reported this year. And then we have a slide here for federal assistance. So I'm sure you can see my lovely red all over this, but we keep this on here because it used to be reported with EMIS. So we have these federal assistance pages in the software. We have the summary and the detail. These no longer are required for EMIS reporting. So this is not a step of the fiscal year-end checklist that they really have to do, at least not for like what's getting pulled and reported at this point. After we, reviewed the page for removal, since it's not required for the EMIS reporting, we got feedback that districts were still using these pages in other ways. They're tracking their federal schedules, and then their auditors go in and look at those. So we have these still in the software due to this request, and so they're optional to use. Maybe this is something, for the ITCs, like, on your ITC checklist, if there's a certain way your districts are using this, maybe they want to have something specific um, on the checklist for it. But I think we have a note. Here we go. We have a note here, that it's no longer required, but we kind of still leave the reference to it because if they're wanting to go in and fill out this information so that they can run reports from it or allow their auditors to look at it, sorry, then it's there. And how this would work, just to review, is first I would need to go to the summary page. And the summary, you see, it's basically got like the years. And I would need to enter 2026 here. I can add a comment, I can check this assistance over threshold if I need, but I would need to at least create the summary first on this page. And then the detail page, I can add like individual records here. And when I create these on the detail page, I have a drop down of the years. So 2026 is not going to show in this list until I create the summary. So if they come in here and they say, "Hey, where's the year at?" It's because they need to do the summary first. So that's something to note with this. You can come in here, enter in the information, and save these records. And then this grid can be filtered, by year if they just want to see the current year's detail records out here. All right. We have a couple slides for the soap service configuration. So EMIS soap service configuration under the system configuration menu, make sure that's updated to the correct year. System configuration. So what this is going to determine, yeah, see in my test instance, I got 2024 here. So I would want to make sure this is 2026. What this is going to affect is when they go into the data collector and they, connect to pull that information with the data with the SIF data collector. This is the year that it's going to look at for the data, and so we can set this to 2026 now. What this helps is like usually they're doing their financial collection like maybe in over the summer or something. Like it doesn't necessarily happen before the fiscal year is closed. And so this allows like I can set this to my fiscal year 26 now. In my instance, I'm going to be able to move on, open July, start my 2027 processing. But then later, when I go do that data pull, it knows to still look at 2026 because that's the year I want to report. So that's what this configuration's doing. So this would be the time of year to check that for sure. And then my next two slides are specific to like the ITC setup. Let me see. I'm not sure how much of this I want to talk through. This is kind of a standard one in here for your reference, really. So this is about configuring the SOAP service with USASR, with USAS. So basically, you can have a user account here as like your to use for the connection, and there is a role EMIS SIF that can be used. And then on this page, here's what the setup looks like on the SIF side. And this is where you would put in the URL, username, and password so that it can use that account for the connection. All right. And then, so I several parts that I've mentioned are, hey, we update this because then that's going to get pulled, as part of the EMIS reporting. So one of the ways that's compiled then is under the extracts menu, we generate an extract file and that gets uploaded into the data collector. So that is going to be extracts, EMIS. Let me close this. And so this has the fiscal year. We would just generate the extract file, and that is just going to generate an SEQ file that I can load in with a subset of the EMIS information. You can see here I actually get warnings because I didn't fill out the cash reconciliation and we didn't put in any civil proceedings. So those were a couple things that I had on the list because those go with the EMIS reporting. So those, this file when it's run is picking up that I don't have either of those. So it's given me a warning on that. You can generate this multiple times. It doesn't hurt anything. It doesn't clear anything. It's just pulling that information. So if I got those warnings, I mean, I have the file, but I could go back and enter my cash reconciliation and then pull it again. That's totally fine. Um, it goes by the fiscal year. So when I'm looking at things like the civil proceedings had a fiscal year associated with it, the cash reconciliation knows what month and year. And so this extract, I could run this like after I close and I'm in 27 if I need to generate that again. I don't have to like reopen a year or anything to generate that. Okay, and then let's see what do you have here. I have sort of a breakdown too because I kind of been talking about this mostly as like a general this is getting pulled for EMIS, but this gives us our actual breakdown of like what is how this information basically is getting over into the data collector. So we generate this EMIS extract, that's the file, that I just pulled. And this contains certain things. So this has cash reconciliation, the civil proceedings, that district and building profile information, and it doesn't include any account or OPU records. So pretty much the only thing we looked in the preview that's not in this was the OPUs. The CIF agent, that's where it's actually connecting and pulling directly through the software connection. And that's where it's pulling cash, expenditure, revenue accounts, the account data, and the operational units. Okay, I have a question here. What should a district put for civil proceedings if they actually do not have any? Some of our districts will create one and put NA to get rid of the warning. Thoughts on that? So honestly, for that one, I was thinking because we got the warning. I think if they don't have any, I mean, it still lets them generate the file. It would show a warning. I think they could probably do it without them if they don't have them. Um,
Amanda, this
yes.
is this is Miss Ito Marisa. I just tell my districts if you don't have any, you can ignore the warning. It doesn't stop
Okay.
anything or hurt anything.
Perfect. Okay, thank you, Missy. Yeah, that's where I was leaning to. And the only other thing I was thinking on that is like when you get to the data collector and you actually do that financial submission, I'm sure, that's good to hear that Missy's having her districts do that because that makes me think there probably isn't an error then at that level. But if they ever, if they ever like, would want at least like a dummy record entered or something, they may add like a validation at that point. But as far as I'm aware, yeah, you could just leave them blank. All right. Thank you for the question. You've ignored the message but wanted verification and tell your districts to create that. Yeah. Yeah, I understand that. All right. And then so from there, so that's really your EMIS the step to prepare for the EMIS reporting. Um we have a step for fiscal year end reports. So if there's anything specific to the full fiscal year that you want to generate, there is fiscal year end reports bundle that runs when the period is closed in addition to the monthly bundle. Um and then we also have a note here, wait until the bundle is complete before changing the current posting period to a new period if there are custom report bundles scheduled to run on the posting period close complete event or the fiscal period close completed event. So this is something we've seen the custom bundle, any of our SSDT bundles. So your monthly bundle and your fiscal year end bundle. When those generate, they have it written in where they know that it's generating for because like SSDT has created those bundles, right? So we can tell that one, hey, that's always running for the month that closed or the fiscal year that closed. So if it's just the standard SSDT bundles, you can go to the current period, you can change the current period to the new period, and proceed. If you have custom report bundles, so if the district has set up, maybe additional monthly bundles that go to their department heads, um, that's when you would want to allow those to complete running before you switch the current period. Now, you can still open the new period and have it available where they could start processing. Internally, it just wouldn't be current showing in like the top corner, right? So it doesn't necessarily have to hold them up. But just a note there. And again, specifically only if they have the custom report bundles. So then once the reports generate, reports can be viewed under utilities in either document storage. Whoops, we got a typo here. Uh, and then, or the file archive by clicking on the row. Um, and then we have a listing of the different fiscal year end reports in the bundle here. After that, it's time to close the fiscal year. So, to close June and to close the fiscal year, you're going to go to your core posting periods. So, core posting periods here. Now, I believe I have plenty of these open already, but just pretend, all of these would be closed. And then I would just click to close my current period. My monthly report and fiscal reports bundles will automatically run. And once those are complete, we can make July 26 current. Again, if it is just the SSDT bundles, you don't have to necessarily wait. But then yeah, so we create and well, I say create, but if they posted budgets already, then July we'd be sitting out there. We talked about the step of like having July created and open if they're entering future year transactions, requisitions. So they may have July already. Um, if it's a situation where they don't, looks like this, I could close June, create July, or I may just close June and July is already there. I want to make sure it's open, and then when appropriate, make it current. So yeah, that's our fiscal year steps. We have a couple things listed for post-closing procedures. Um, and the first thing rather noted here is the district audit jobs for AOS. So it's been a couple years now, but these can be scheduled under the job scheduler. Um, when uh, when they came out, when this became a thing a couple years ago. Here, let me go there. You can schedule these, and you can schedule them on to run once a year. So we have the SOC 1 audit job, district audit jobs out here, and then a cron schedule. So if this is something, and honestly at the ITC, you may have scheduled these, but if this is something that you've previously scheduled and they're out here scheduled to run once a year, you don't have to schedule them again. This is just sort of a reminder if there are any like new districts that are set up, or you may want to check and just make sure that those are still set up and good to go. We sort of just have this step in here as a reminder. Let's also update that because I missed a year update in here. Okay, so yeah, and then when this audit job runs, it'll send reports to the file archive, or document storage, and we're updating on the fly here. Document storage slash file archive. Perfect. Um, okay, don't mind me. All right, there we go. And it'll securely transfer a file of those directly to AOS as well. All right. And then we have another note on the financial submission. So I know we've talked a lot about the information that goes into this. But this is actually the step of like, hey, through USAS, like you got that EMIS extract file. We talked about how the data collector connects, but then there's actually the process of doing that fiscal year end reporting. So that process is done through EMIS R. It's a responsibility of the district. Excuse me. Okay. Um, so an authorized person in the district, maybe that's the EMIS coordinator, maybe that's the treasurer, will upload the flat file, so that's the EMIS extract file that we generated, run the data collection process, and then submit that data to DEW. There are also some steps in there where there are, validation checks they can do. I definitely recommend with the financial reporting process, they can pull out spreadsheets to view like, the accounts, the totals, and it's really good to do a balancing step with those. That helps ensure like, hey, everything that I expected to pull from the accounts pulled. That's also a good time, to check and confirm that it is matching the fiscal year figures that you expect it to match because, again, it's based on that configuration. So if somebody forgets to change that from a previous year, that checking step is helpful to make sure, like, yes, I'm reporting my current year figures. And then, yeah, capital assets used to have a step in there, but that is no longer needed. So, pretty much just your account data there. I also have, I pulled the current schedule. Um, so DEW has a draft schedule posted online. They have the data collection calendars page out there. So I just pulled this. So this is what it's kind of looking like for the financial collection. It opens at the beginning of June, so they could always do some preliminary runs and then doesn't have to be submitted until the end of August. And then we have some additional notes here. Um, and some of this I feel like is repetitive, but I feel like these slides, it's helpful to have like a couple different ways to see it. So, this isn't necessarily different than what we talked about. But basically this is saying, again, that sequential file, the EMIS extract, um, so that needs to be uploaded as like a data source. And again, that's got like the subset of information. So that's where the civil proceedings, district building information is. And then the EMIS SOAP service configuration that we set with the year, that is what's telling SIP if it should pull account information from the history records or the current records. So depending on, it opens in June, but they can run it until August. My configuration is set to 26, so it'll always see 26 and it'll know, hey, yes, this is the current year, or no, it's not. Either way, it's going to pull the data for that year. And here's just like a visual of, what is being pulled into each. The other thing is there's also an extract for gap. So you can run the gap extract from the menu and create the files for gap reporting. This one's pretty simple as well. You would just come in here, gap, select the fiscal year, and then when you click submit, that is going to generate a file so that, you may attach that file and send it to, whoever would upload to WebGap. And then I have some links to the WebGap information. So here's the link in the wiki for easy reference. And then I had a slide here just about the AOS manual changes. So I do have the most recent version linked here. Yeah, okay, it does open in a new tab. So this goes to the manual. And then let me just get to the last page, I believe it is one of the last pages. They have an update here. This last page in the appendix I thought was pretty helpful. Just for a quick view is this is like the summary of their changes in the May 2026 update. So action items organized by effective date. And this is where, items to be completed prior to June 30th. So analyze and address any remaining balances in grant funds, currently no longer active, address any remaining balances in activity in funds that will no longer be active by June. As far as USAS options that can be used for this is, first of all, mass load. I think a lot of the situations that I've seen, mass load can be very helpful. With some of these steps here, Like if we look at some of these, like the special cost centers, begin use of newly established special cost centers. So this is completed. This starts in July 1 of 26. So with this, what that means to me is that begin use of newly established objects, receipts. These are new accounts. These aren't accounts that need to be changed before, they don't need to be used or changed before July 1 of 26. So when we're talking about them in the software, what they can do is add those accounts starting for July 1. They can put in a July 1 start date if they want. But those accounts can be added. They could be budgeted to at this point. Those can be sitting out there. It's not something that they need to wait for like a cash account change for. The account change is not going to apply for those because they're not actually moving. They don't have to move history for that type of account. So in that situation, mass load can be very helpful. You could even, if there are current existing accounts that they sort of want to match, like, hey, I have, all of these accounts with this object right now, and I want to, make accounts with a different object, but I still want that whole structure. I could extract those, change the object code, and then import new accounts using mass load. Again, I showed an example of that on the budgeting training. So, that may be something if you want to see it, if you want to, see a little bit more on that, may be helpful. Mass change is something that can also be used to inactivate all accounts associated with inactive cash accounts. We have a special mass change that is in the section I linked here. So if there's a fund special cost center that they're no longer going to be using, they can make that inactive on the cash account level. And then this mass change would go in and actually change the inactive flag on all the underlying accounts if that's something that they prefer. Technically, they don't have to do that step, but I know sometimes that helps to have everything marked. Distribution error corrections. This one may be really helpful for reassigning expenditures originally charged to a different account. So if this is, they had something expended one place, but they really want to move that expended amount that should show on a different account's totals, they can use distribution error corrections to do that. So instead of like an account change where it actually goes in and changes all the transactions and that's restricted to accounts in the same fund, this can help with just moving the expenses so that the accounts are correct. And then cash account change. So once that's available, that is going to be to move an entire fund to a new one that doesn't exist. A couple things about that is the fund special cost center that you're moving to cannot previously exist. The from special cost center and all underlying accounts are going to be made inactive. So that's one thing that, I know when this comes out, I think kind of reviewing like when this is going to be used. I do hope I know that there are definitely situations it's needed, but I almost hope that, I know districts have been sort of waiting for this, and I think that a lot of situations don't use cash account change. So it seems it's pretty narrow. Definitely the situations exist, but I think it'll be a review in a sense of like, okay, is this something where it requires a cash account change, or is this a different solution that I need to, look at from these options? So cash account change, basically it is, mostly these old grant funds that are not needed. Also, it's when the activity for this current fiscal year needs changed. So similar to what we talked about with account change, like it's going to go in and actually update any transactions of the current year from the old accounts to the new accounts. At this point in time, it's not something that's going to be like merging accounts. It's just changing, the old account is no longer used to a brand new account in a different fund. So, I know we've gotten some questions about like thinking maybe this is needed for like the general fund special cost centers, for example. And you're not going to be changing the general fund, like you're not changing the entire general fund, and the general fund, of course, is not also going to be inactive. So, that's like a situation where a mass load would help to make those accounts. but you're not necessarily going to be using a cash account change. So I know I talked about that in the release recap, so I won't go off too much on that. We do have a training coming up where I will talk about cash account change in more detail as well. Um, but that's just sort of a summary on that. So, with that said, um, upcoming training up next, inventory fiscal year end review. We are, still talking about that today. May 22nd, we have a SubHub Ohio preview session. And then June 5th, we'll do our May release recap. And on June 12th is when we have a full training dedicated to USAS cash account change or fund change, as we were previously referring to it, overview. So that is our USAS year-end meeting. Um, If you have questions, please feel free to put them in. I think what our plan is, let's take a break before we jump into inventory. So 9:56 right now. Let's come back. We'll come back at like 10:05, so like just under a 10-minute break. Everyone get some coffee, take a stretch, and then we'll come back. Again, I do have changes to that inventory checklist. So yeah, I figured take a break so we're fresh because we got to switch gears and I have some exciting stuff to talk about there. So yes, I will pause the recording and I will see you back here at 10:05. All right, welcome back. We are going to next go into our fiscal year end materials for inventory. So we'll kick that off. I got us back to the home page here so that we can just look at where the fiscal year end meeting materials are. For in case anyone's like jumping forward to the inventory part, do a little review here. So from the main page, I'm going to the meetings and trainings. And we have the year-end meeting materials page. As we talked about with USAS, we kind of split these up now because it was getting a little crowded all on one page. So we have a landing page for the inventory ITC fiscal year-end meeting. And this is where we'll have like the recording linked and everything, but we have links to our inventory fiscal year end checklist and the presentation. So I have the presentation open. So this is what you would access from this link. And then let me open the checklist here as well. And then let's see. Yeah, okay. So here's our checklist. So we're gonna talk through all of this, but just to kind of give us an overview at the start, if you're on the USAS one, I know I mentioned this at the beginning, but we do have some changes that I made to the checklist this year, to the presentation. I know, at the ITCs, you may kind of use this and then coordinate your checklist off of that. So I'm going to try and mention like, hey, these steps change the best I can. We're going to talk through them. But I'll try and help with that. As far as updates this year, so really sort of an overview is the first one, document storage. And we sort of mentioned that with USAS, but so in inventory, document storage, no, once they have that, once they're using document storage, they won't have that fiscal year end bundle sent via email anymore. So that's going to be a pretty big change for inventory. We're going to look at the pre-closing procedures. So quite some changes there with the steps. When I was kind of reviewing this to prepare for fiscal year end and I was looking over those steps that we had, the things that we had there can be done, but in reviewing them now that we're like farther away from the migrations, they weren't necessarily steps that are like needed to do on a regular basis, So we kind of revised that and said, hey, look, now that we're, fairly removed from when everybody migrated to inventory, like what are the things, that we're really looking at for pre-closing procedures, sort of organize those there. We'll talk about this step 4 with the acquisition original cost report. So I'll go through that. Some of you are familiar, some of you may not be, but I thought this was a good chance to sort of talk through that report. And then let's see. And then later, once we get into the checklist, I did add a step to help with like review and balancing data. I know inventory can be a beast. I know it's difficult, with some of these reports. And honestly, like, it really isn't reviewed that often, right? Like it's something that usually maybe like once a year, some districts, do their entering of items in the year, but it's not something that we're hands-on in all the time. And so I know that balancing can sort of be, something that um is a little bit confusing, like what to look at, what to compare. And so I've put some details into like a balancing step for suggestions. And I sort of base that off of, in the past couple years, we've gotten quite a few questions, coming from you at the ITCs of what your districts are balancing, but also what their auditors are looking at and then asking them about. And so I've tried to focus on those things in the steps to say, hey, here's what they can look at on their reports at fiscal year end. And my hope is that if they're looking at it at this point, then, that's something that they can confirm before their auditors are then looking at that later. And that way, if there are things they need to address or if there are questions that arise, they can make notes of those things and be more prepared. So I'm really hoping that that's what this can sort of help with. Um, Similar, we'll go back and forth. We're going to look at the checklist for sure, but as usual, my PowerPoint also goes through the steps that are sort of similar to the checklist. I have a couple things added, but same flow. So we'll start here. Um, yes, okay. So we have our reference, in the link to the meeting and training page where um, those links can be found. As far as pre-closing procedures, so this is sort of the first thing that I revamped. What we're looking at now for steps is finishing your current year processing. So a little bit more similar to what we have on some of the other checklists where we actually sort of added a step, excuse me, add all new items for the fiscal year. So we had this step previously about, if you're using pending items, ensure all the pending items received prior to June 30th are entered as assets for the fiscal year. If the PO items were ordered prior to June but are not received until after, they can be added as an asset next year. But really, the first step now, and this is something that they were doing before, we just didn't have it specifically as a step on the list, but they would want to make sure any new items that they receive for the year, that's something they would do before they begin the closing process. So this may be done throughout the year, or some districts wait and then add everything before they start closing. So add new items. Number two, enter acquisitions and dispositions. Dispositions that occurred in the fiscal year. So did they, if they're adding new items, those may have acquisitions. But if they have any items that, they need to add an acquisition to, or if they have any items that they need to dispose of, then that's something that they could do throughout the year. But they would want to make sure that anything that they want for the current year activity, they would enter that before they begin their closing process. Similarly, if they need to transfer items from like one fund, function, or asset class to another, they can enter transfers. And the reason that I put specific steps for each of these items, items for each of these different kind of transaction type is, adding items, entering acquisitions or dispositions, and then transfers is that when we get to the step of looking at the gap reports, there are totals for each one of those categories. And so before they start their closing process, it's important to get in any activity that's going to affect the totals of those reports, right? So again, I'm sure these are things they were already doing, but this is just kind of a specific step to say, hey, yeah, all this processing, that should be done first. Okay, and then next I want to talk about the acquisition original cost mismatch report. So let me get logged into an instance here. Let's do a little zoom. Hopefully that's not too much. So under the reports, this is a non-GAAP report that we added, acquisition original cost mismatch report. Um, so this says this report will show items that have an acquisition total that does not equal the original cost. This report will help determine the acquisitions prior to system startup amount on the fixed asset by source report. So what this helps with is identifying if there are items that have an original cost value on the item. So actually, instead of going to the report, let's go here. So we're talking about, so let's just find an item here. So when I look at my item record, um, this one, I have my original cost here, right? So my original cost of this item is 7,000. And when I look at the acquisitions then, I have an acquisition record for this 7,000 and it's set to update the original cost. This is normal. This is what I would expect to see. This is how an item should look. And when they enter an item in inventory, whether they're entering it or they're importing it, anything that's created in our current application, it has to have this acquisition with the updated original cost in order to add on to the total we're seeing on the item. Um, so what this is identifying is like, are there any situations where that's not the case? And let me see, I'm trying not to get ahead, but I want to explain why too. Here. So the only way that it can happen, like if I have an item that has an original cost and then, sorry, and then the acquisitions do not exist to add up to that same original cost amount is if they were migrated from the classic software and they were missing acquisitions. Like if they were migrated without those acquisitions. So that's the only way it can happen. It can only be classic data if you were to like migrate somebody, from a different application, if you're using the migration import to start a district new or any items that are entered like in our software now, this can't happen with. So the good thing is this isn't going to be like a lasting issue. Um, so we had, and so what I would say, we're going to talk about running the report here in a minute. But the reason I put this on here is that it may help to run this now to identify if a district has items in this situation. This report itself is going to show just capitalized items. Um, so let's see. Um, Sorry, I'm getting ahead of myself. So before we talk about running the report, I mentioned this could only happen in classic software. There was a pre-data extract procedures step related to acquisitions prior to system startup. So some of your districts, like you may have cleaned this up at that point if you identified those acquisitions prior to system startup. So this isn't necessarily going to be the case for like every district that migrated from classic, because first of all, did they have missing acquisitions in their classic data? Maybe, maybe not. Were they addressed when you migrated? Maybe, maybe not. Um, because there was an option where, it was optional step to go clean these up at that point, add historical acquisition records. Um, and then, okay, yeah, and then I just have it noted, like I said, this can't happen anymore going forward. So here's what we're gonna do though, is in this step, what you're actually doing is coming in here and running this report. You can choose to run it by fund, function, asset class. That's just how it's going to be organized. Um, Select item statuses. So this will filter to just the capitalized items, excuse me, but you have the option to run it for all statuses. What I would recommend and what I noted in here is I would run it for active. I would run it for all of like the active statuses first. So like not for disposed of or inactive. I'm forgetting right now if old tag is included or not. It's fine. We'll use it. Usually those aren't used often anyways. So I would just run it. Hang on, I probably have it noted. Oh yeah, I knew it. So not the old item. It's not included. Okay, thank you, Darby. Yes, I know Darby has been on this report for sure. Okay. So, this is what I would recommend, at least for like initial wave of seeing what you have on here. There are situations where you may need to review the disposed of items. Um, One reason that this comes up, we'll talk about here in a minute, has to do with starting values for the year. And so if you have anything that may be in this situation that was disposed of in the current year, it could be affecting the starting balance. So we'll get into that, but for an initial run, I would say just run it for your active statuses, and let's generate this. I don't think I have much in this test data. Oh no, I don't. Um, so anyways, pretend we're running it for active statuses. I know I have something here that's just forgot that it's disposed of once. So just to show you what this looks like. So it will break down by, whichever sort I had it. And then it's going to show you the item tag number, description, status. And then what it's showing is, so these two columns on the end are what's important. So in this case, we have this item has an original cost on the item of 48,170, but it has no acquisition amount. So the acquisition's missing here. And these ones are disposed of, so it may not affect anything on my current gap report, so I may just be fine ignoring them in this one. But if this was active and affecting my gap reports, then this may be something I need to address. Um, so let's talk about that a little bit more. Why this is important. So this is something that came up towards the end of last year, so it may depend on when your district's closed. So that's why I wanted to add this to a note for this year. Prior to November 2025, the schedule of change in fixed assets, so the gap report, now I got too many of these open. Our gap report, schedule of change in fixed assets. The starting balance on that was calculated using the original cost on the item. Okay. And what we did is we had to change how that calculates, and we changed it so that it uses the acquisition amounts. And in theory, those acquisition amounts should be the same as what the original cost is. Like, because you can't have, again, anything that's entered new, anything that's not in this specific situation from Classic and also was not cleaned up on the migration is going to be equal. So we changed it to use those acquisition totals. Now, the reason that we changed it is because that allows the beginning balance to calculate more accurately. The main thing that we were seeing is payment type acquisitions. Those are included in the item's original cost, but they shouldn't be included in the gap reports. So we had to change this calculation so that it could account for that. This also allows those totals to accurately make sure to filter if they have acquisitions where maybe it was first acquired, they have one acquisition in a prior year, but then they added an acquisition in a later year for an item. Those two amounts contribute to the original cost, but they happened at different times. So if you were to run a report now, or if you were to go try and retroactively run a report, this allows us in the system to be able to distinguish the difference of when that original cost increased and make sure that these totals on the reports are able to generate more accurately. Now, what the result of that is, and let me see if I forget what my next slide is here. Yeah, so these totals should be the same. However, they could be different. And what this resulted in when this happens is if districts are missing that data, if they have missing acquisitions and they have items on this report, then when they run the schedule of change reports, those acquisitions are not there to be included in the calculation, even though they were previously showing on the report when it was using the original cost. So what it looks like then is if they have a saved bundle from before November 2025, so say like they closed their prior year in, October or whatever, and the ending balance would be higher because it's using the original cost. When they generate a report now, if they don't have the acquisitions to back up that original cost, it's going to be a much lower figure, potentially. So that's why I'm mentioning it now, because this would be the time to find that if that's the case. And if you have districts that have this situation, I have a whole documentation page out here written that goes through some of the stuff I talked about. Here's the why, here's what's going on. Here is, when this changed. This is the, versions that, had the recalculation to be able to use the acquisition amounts. And then there's a couple different situations when you look at these items, like is does it just not have an acquisition at all? Um, Here, let me open this report again. So like we have this item here. So in this case, here's our example item from the report. Should open this. And we have the original cost amount here. If I go to my acquisition grid, I just don't have any acquisition. It's just completely not here. So in this case, this would be scenario one. No acquisition records exist. And then it is possible that maybe an acquisition exists, but it's not for like the entire original cost amount. So I kind of have these documented as like the different possibilities here. So you just would need to like look at the item and see, okay, what's the situation? And then we have correction steps laid out. So running the report, and then basically the fix. So the way to fix these, it does require ITC intervention because you would need to use the migration import. But the basics would be you would make a spreadsheet and for like an acquisition import, and then basically put those acquisitions back because like so you can match to the original cost that's on the item and basically fill in those missing records. So this walks through what the different scenarios, what that would look like, the migration import, and then there is a step where you need to recalculate the original cost. So yes, so I have this all documented here if that's something. So, I know this can be a lot. I know some of you have been working on it, and finding these and balancing them all out can be a lot, but I wanted to mention it now on our fiscal year end meeting because I figured if you do have districts in this situation, it would be much better to identify them now and work on the cleanup than if their auditors find it and question this in the fall. So that's our first big one. Let me get back. Okay, so here's the checklist. So I have this on here as well. Um, okay. The next thing that we're going to talk about, I'm diverting a little bit from the checklist on my PowerPoint in this specific section because I want to take a little tangent just to overview item organization. And this is going to become important because in the next steps, when we talk about the reports and we talk about some balancing things, our report groupings can be based on the item organization. So each item is designated a fund, a function, and an asset class. And if we go back over here to our items, let's do um right here under the current information. So we have fund, we have function, and we have asset class. So this is defined on the item level. And yeah, they're used to sort and group items throughout the software on the different reports. Um, how these can be defined, these can vary per district because the different options for each of these groups are defined on the core menu, configured by the district, so the details will vary. So this is going to be, we have funds, functions, and asset classes all from this core menu. So this will potentially be different for each district, but this is where these are sort of set up as far as what's available. I'm gonna close this. Um, and then with funds specifically, I wanted to talk about this because funds are used to define the item's current fund for which it's being used. The fund code is not necessarily the source from which it was purchased. And then it's also attached to like a type, a fund type, governmental, proprietary, or fiduciary. So when I'm looking at my items here, I have per item, this is the fund that it's defined in, the 001. But we get questions sometimes because they're like, well, I can pick a fund on the item, but my item was half purchased from this grant and half purchased from this other fund. And so, I need to put two funds on there. So on the item, there will always only be one fund, and that's whatever it's close aligned with how it's being used. But then we have the source code. So source fund code, I have some notes on here on the acquisition level. So an item can have more than one acquisition. It could have multiple. Um, so what I would do, oops, this one's missing one, huh? Uh, just to look, I'm just pulling a random acquisition so we can look at what the information is here. But when an acquisition is entered, this is where it tracks where it's purchased from. So you can enter the full account code here. And so say it was half purchased from one account and half from another account, that item would have two acquisitions. So one acquisition from the grant account, one from the remainder, and then the associated amounts. And that is what's going to represent the source where it was purchased from. So that can be confusing, when someone gets to an item and they're like, wait, I need two. They don't. Um, and then how it works is there are certain reports. So source reports, there are certain reports that I'll mention as we go that use the fund code from the source instead of the fund code from the item. So it's just a difference of what information they want to see. If they want to get, it broken down by source, that is an option. They just have to use certain reports to do it. The other thing I want to talk about is item amounts. So when we get into talking about the reports and the balancing, we have to remember there's sort of two categories of totals that we're looking at. And the first big important one is original cost. We saw that on the item, the original cost, the acquisition amounts should total the original cost. And this is the cost of the item as given on the purchase orders or the sum of all acquisition amounts for the tag number. It can't be manually changed. It'll always be the total of his existing acquisitions, minus that missing exception situation. And then it's part of what determines the capitalization of the item. So generally you have your capitalization criteria that has a certain cost, like threshold, and the years, the life expectancy. So the original cost is representative. This is when we are going to look at like your fixed asset reports. The original cost is going to be what we're looking at. How much cost do we have associated with that item? The other thing that we're going to look at, our second box, is looking at the life-to-date depreciation, or the depreciation in general. So the life-to-date depreciation is the total amount of depreciation for the item from the beginning of the depreciation date until the last fiscal year closed. So this is a field that tracks on the item as well. The depreciation is basically like a calculation, based on those depreciation factors, but also like on the original cost. So, separate from the original cost, loosely based on it, along with other factors. And this note about it, like it's, from the beginning depreciation date until the last fiscal year closed. It's worded that way since you could look back at like previous years and stuff like that, or you could have like a future year open, but But in the general sense, like if I'm just in the current, I'm in fiscal year 26, I have not closed 26 yet. I'm looking at my current year and I don't have any future years, then my last year closed was 25. So when I look at my item and I have a life to date depreciation, it's the total depreciation from the item beginning date until the end of 25, and then that's my starting balance for 26, right? So life to date is equal to the starting balance as long as you haven't closed future fiscal years, sort of thing. But on the reports, it's basically the starting balance of depreciation. The starting depreciation, I should say, not balance. Okay. Um, so then we get into the fiscal year end closing procedures. Um, And this is where we're back to the checklist. So when all assets have been entered for the fiscal year, districts can run the recommended list of reports. This includes all necessary gap reports. Um, and then, I have slides explaining these different reports as well. Let's go back to their checklist. So I have this step 5 here. When all assets have been entered, run any reports desired. Um, the inventory fiscal year end bundle includes most of these suggested reports as well, but we list them here if you want to run any additional reports. If there are things that they're checking, this is sort of our standard list. I've organized it into a table, but this is the same list that was here before. So this the reports like in this step didn't actually change. I sort of kind of cleaned up like gap reports, non-gap reports, but all of this information is the same as it was previously. The step that is new is where I added some detail on balancing, and honestly, I say new, but it's not. I've added it to the checklist and I've put some notes in here because I hope this helps sort of with like, I know, like I said, year to year, you're looking at this. It's not something that necessarily like you're always in. So, but the information that is in this step is from what we've always had in the PowerPoint. Some of this step we talk about in the PowerPoint on fiscal year end normally. And then when we get into some of these other things, there is a balancing recording from a couple years ago that Michelle gave. And the information I have in here is like also directly consistent with what we went over at that point in time. So nothing like new, but reorganized in a way that I hope can help. Because I know this can be a lot to look at. So uh yeah. Um so yeah, so we'll go through it all, but I just, I realized I said, hey, we got this big change. Um and it is, but it isn't. It is really what it comes down to. So the first thing here is I sort of include this thing about or like this caveat about the gap reports. So all gap reports are canned reports and are located in the reports menu. They're generated in PDF format only. Um, they contain separate sections for each fund type, and then gap reports only show items that meet certain criteria. So I have this included here and on the checklist just because it's important to remember. Whenever I run one of those reports that is from this gap reports menu, it automatically will only be showing me capitalized items. It excludes items that don't meet the cap criteria. It excludes items that have these statuses, and it excludes items that are coded as an operating lease. So that's important to remember. It's automatically doing a filter that you're not even seeing when you generate those. We're pretty used to it at this point, but it's helpful to know, especially if you run into, something's missing because it's an operating lease and we don't see that often. This is helpful to make sure to keep in mind. Um, so let's see. I don't want to be too repetitive, but I have different or I have information in both places. So let's roll with the PowerPoint, I think. I'll try not to hop back and forth too much, as if I'm not already doing that. So the first gap report is the fixed assets by source. This is a summary of the original cost of capitalized items by their source or fund. And this is when we talked about earlier how there's the original cost on the item. I'm sorry, there's the fund, function, and asset class on the item, so the fund on the item, versus the account code on the acquisitions. And so this breaks it down by the source fund that is on the acquisition. So if I have an item that has multiple acquisitions, this report will break down the amount for that item into the different funds it was purchased from, not just the fund on the item. Um, And then, so next we have fixed assets by function and class. So this one, there's three different versions you could generate to pull this from, by function and class, or a summary. For fiscal year end, we recommend to generate all three. And this report, so fixed asset by source report, let me generate this real quick. Um, Wait, I'm sorry. Because I have my source and I wanted to do the fixed by function class. Again, so this is what I meant to show. So we have by function class, by class, or the summary. Um, and let's just generate a test real quick. So I just wanted to show on here, so this breaks this down by function and then class. And we're seeing the original cost and the book value on this report. So original cost, like I mentioned, the original cost that we see for each item, that's made up of the acquisition amounts. And then book value, I have a list on your book value is original cost minus the total depreciation. So the book value is shown on this report as well. And then schedule of change in fixed assets. We're going to talk through a bit more, but basically the gist of this one is it contains changes in capital assets during the current fiscal year. You can generate this as a summary or a detail report. Um, Sorry. And then the summary report specifically lists the beginning balance, acquisitions, dispositions, transfers in and out, adjustments, and the ending balance. And so what I mentioned with our pre-closing steps, like, hey, you want to enter all of these things before you start, closing is because these are specifically the totals we're going to see where any activity, any changes or activity in the current fiscal year is going to now show on these reports. So let me get to my notes and make sure. Let's see how we want to do this. Okay. Um, let's look a couple places. So we have an example here that I'm going to talk about this report. This is what it looks like, right? Um, so on our checklist, let's jump here real quick. Schedule of change in fixed assets. So I have a little section for this. This report confirms changes to the original cost / beginning value from the start to the end of the year. As far as balancing steps, confirm the beginning value of this year matches to the prior year ending balance. Any differences should be identified. This is one of the things when I mentioned, with that acquisition mismatch, if you have those, this is a way to catch that. There can be other, situations where usually these should match, right? The ending balance of last year would match this year. But I know that's one thing specifically that we've had questions on. If there are any differences, those should be identified because I'm certain the auditors will likely ask about them. So that's added in this step. I have then sort of laid out here a description of each of these columns we're going to talk about for reference, and then also like some balancing notes here. So let's talk through this. So the beginning value, so that those columns correspond to our report columns here. So first I'm talking about the summary version at the top here. The beginning value in this first column is going to be the total original cost as of the start of the fiscal year. So calculated with any acquisitions dated prior to the fiscal year start that have that checkbox to update the original cost. So the beginning value is like, hey, what was my original cost coming into this year? Then I have my acquisition amount. So my acquisition amount is going to be what what additional amounts did I acquire this year, right? So any acquisitions that are entered in this current year, including new items that were acquired in the current year, are going to be represented in this column. Disposition amount, so anything that was disposed of. I no longer have this item. I'm disposing of it in the current year. This is how it gets reduced off of my balance, so that it doesn't affect my balances going forward. And we have the transfer in and transfer out. So these, if you have these, it would be like it's moving, say I moved an amount from this asset class to another asset class. I would have like a positive and a negative on these two columns. So these two columns should end up balancing out to zero. It's not increasing or decreasing your balance. It's just moving which one of those rows that the amount's being included in. The adjustment amount, so the adjustment amount includes any transactions marked as error adjustment. When I enter an acquisition or a disposition record, there is a checkbox on those for error adjustment. So sometimes that would be used like if you don't want that amount to affect, because this is like the acquisition amount for the year. So if that's something that should be separated out into adjustments, there's an error adjustment checkbox. The other thing that will show in adjustments is if items changed their capitalization criteria. I'm sorry, changed capitalization, which could be due to a change in capitalization criteria. So if the district changed their capitalization criteria this year, then you likely will see adjustment amounts. On this report. The other situation though, where just like an item could change capitalization, is I had an item that I entered and it was less than the amount threshold. Like it was only 4,000, but in order to be capitalized, my items have to be 5,000 or more. And so when I got it, I entered in the item and I entered in the acquisition for 4,000. Now, that was last year. This year, I'm adding another acquisition to it. I'm adding value to it. And my new acquisition puts it over 5,000. So now the item is capitalized. It will account for the difference of like, I mean, the acquisition is from this year, but then the item becoming capitalized in the previous amount will be included in the adjustment amount. So that's kind of like the other that it needs to account for. Um, and then the ending balance is a calculation based on all of these factors. So beginning value plus anything acquired in the year, minus anything that you disposed of, and then plus or minus transfers, plus or minus adjustments equals here's where I'm at my ending balance. So this is one big math calculation. Um, If you want detail of your acquisition amounts, disposed of, transfers, adjustments, any of these things that are specifically this year activity, so the beginning value is everything before, but anything that is in one of these columns that represents the actual change in the current year, if you run the detail report, you can see there are columns for each of these things. So if I wanted to know specifically what acquisitions were added to this asset class that make up this 16,000, I run the detail version and it tells me here's what the item number is, and that has that acquisition total that was added this year. So if you have like say adjustments and you're like, what is that adjustment amount? I don't know what that's from. Run the detail report and view, the adjustment amount totals, and it'll tell you what items that's coming from. So those reports, those three gap reports, cover so those are our fixed asset reports. So that's where we're focusing again on like original cost amounts. So the totals on these three reports should match when balancing for the fiscal year end. So this is, I had to kind of scroll past it, but this is the first one I have on here. Fixed assets by source, again, that's coming from the acquisition amounts. Fixed asset by function class has the original cost, so that should balance. Like your totals or yeah, your totals should balance here. And then the schedule of change in fixed assets, the ending balance should match because these reports like are including acquisitions for the year. They are including, disposed of. They are accounting for those changes within the year, so the original cost is going to match the ending balance on the schedule of change in fixed assets. Okay, and then I also want to just make note on these slides. I have this linked balancing reports recording. This is the training I mentioned. We had a training a couple years ago that Michelle gave, which is an excellent training that I reviewed when putting together all of these balancing steps. So, I'm talking through as much as I can, but if, I know sometimes it helps to, absorb these things in different ways. That training's still excellent to go back and watch, so I have it linked on here. So next we have the schedule of change and depreciation. And, we go back to that slide we had original cost amounts, life-to-date depreciation amounts. So this report is sort of like the counterpart that we have schedule of change in fixed assets, which gave that overview of here's where my original cost started, here's what updated it, here's where it ended. This one does a similar calculation, but it focuses on depreciation amounts. So it contains changes or any like activity that happened with the depreciation during the current fiscal year. You can also generate this one in a summary or a detail report. And then has, beginning, continuing items. So let's look at this here. So similar layout. Um, it has a couple little differences here though, because of course this is depreciation, so it's not exactly the same. Schedule of change in depreciation. So the first thing is the beginning depreciation. And we talked about how that life-to-date depreciation is the depreciation from the start of the item until the last fiscal year closed. So my beginning depreciation for the year is based on my life-to-date depreciation for any items that I had prior to this year. So that's what I'm seeing for the beginning depreciation amount. You know what I want to do? We looked at the original cost on an item, but let's go just look at an item here. So we have our tag number, we have our information. If I scroll down to my depreciation information here, right here I have my life-to-date depreciation. So this is what I would see on the item. Again, what is stamped here does depend on my last fiscal year close, but in this case, 2025 was my last year. And then that equals up to where my life-to-date depreciation is at the beginning of 2026. And then we have continuing items. So, what's going to happen is because my life-to-date depreciation is as of the start of the year, I have items that already exist, and those items are going to have an amount of depreciation for this year. So, for any items that already existed, my software is going to calculate the amount for the year to date of depreciation, and it's going to add that on. And so continuing items is the fiscal year to date depreciation for all items that were capitalized at the beginning of the year. This continuing amount for the fiscal year isn't actually stamped on the item yet, but it will be when the year is closed. So when I see these entries, like these internal entries for previous years, that this continuing items, when I'm looking at, say, I'm looking at this for fiscal year 26, continuing items is sort of like projecting that, right? It's calculating that and it says, hey, when this year is closed, I'm going to be adding on another 380 for this item that's included in this total, but it won't actually get stamped to the item until you actually close the fiscal year. So just important to note there. And then acquisitions. So this is going to be the depreciation that's calculated for acquisitions that were entered this fiscal year. So that could be like new items or acquisitions that are added on to existing items, but this is the depreciation associated with any new acquisitions. Um, and then disposed of, this would be the total depreciation for disposed of items this year. That would include life to date and fiscal year to date amount. So the total that needs to be disposed of, the total, sorry, the total depreciation associated with those disposed of items would be here. Transfers, again, that's basically moving. If an item is moved, if an item is transferred from, one asset class to another, this would account for the depreciation associated with that transferred item being reflected in a different spot on the report. And then error adjustments. So the error adjustment is going to be depreciation for transactions that qualify for adjustments. So on our fixed asset report, we talked about, what would qualify for those error adjustments. This is similar. It's going to be based off of that same grouping of items. It's just going to be the depreciation amount associated for those items. And then ending depreciation, again, is a calculation. Beginning depreciation amount plus continuing items plus anything acquired, and then plus or minus like these changes will equal the ending depreciation. So this is what it's going to be after all of this year's updates, after this year's depreciation is all calculated. And same as with the schedule of change in fixed assets, if I wanted to see details of what's going into anything that happened in this fiscal year, I could run the detail report and I would see the actual item numbers contributing to that. We have then some non-GAAP reports listed on here. So the asset listing by grant source, that is going to list acquisition transactions directly by source. So by like the fund or like the account code that is on the actual acquisition itself. A brief asset listing, that can be helpful to review assets or a subset of them. That's basically giving you the standard item information. The book value report, I want to talk about a little bit more. So this one can be helpful. It displays depreciation information, listing original cost, the salvage value, book value, percentage of depreciation, and the last useful life. This is the other report that I've found. It seems like the auditors are looking at. So let me double, do I have no, I don't have a screenshot of this one. So this one, we have below our schedule change in depreciation, I also have a section for book value report. Now, this is a non-GAAP report, but it can be helpful to review the detail at the item level and compare to the GAAP reports. Again, it's not a GAAP report, so it doesn't like automatically filter the way that anything on the gap report menu would. Let me show. So like these ones all run based on the exceptions of like it has to be capitalized, it has to be active, that sort of thing. The book value report, when you generate this, generate it for the current year, but you would want to come in here and select if you want to compare this to gap report totals. I would want to make sure I sort it and filter it in the same way that my gap reports would be sorted and filtered. So the statuses, and then just for capitalized items, um, and I have that noted on here. And um, okay, so then, and you know what? Let me just generate this for the current year. Just a minute while it's generating. Okay, sorry about that. Um, all right. So here's what our book value report looks like. Sorry, I just had to update my notifications. So, all right. Uh, so here's what our report looks like. And we can, you know what? I should have done this. I do this often as we have sort options. So I could sort this like to also be grouped by like my asset classes or by my funds or my functions. So if I'm trying to compare to either a schedule of change in depreciation or a schedule of change in fixed assets, I may want to sort this the same so that I can, oops, I already clicked generate, so that I can compare like maybe the totals of my sections. Um, and when we start looking at these totals, I have this sort of broken down here of some of the things that I can compare to my gap reports. What I've found, because when we talked about these reports here, we had, or anything that happened in the fiscal year, acquisition, disposed of items, transfers, I could run the detail version and see what items included. But what happens is that sometimes you're trying to look like, yeah, but what is calculated in my beginning depreciation? What is calculated in my value, in my original cost. And so if you're looking for the detail that isn't in the current year activity, it's in the overall items, the book value report can be helpful for that. But you also have to know like what the columns are going to be compared to. So um, let's look at this again. And so I have this, sort of organized a little bit better now, and it's showing me each item within my grouping. And so I do have some of my standard information, my asset class, my location, the depreciation method. But I'll tell you specifically when I'm comparing or when I'm getting questions about comparing to the gap reports, because we ran this one to run for the gap reports, original cost, this field they may look at. And the important thing, big important thing when looking at a book value report and looking at the original cost is the original cost compares to the ending balance on the change in fixed assets. Because this book value report, it is including up-to-date information on if I'm in 26 and I had acquisitions in 26 or I disposed of items in 26, this report is going to take that into account. So when we're looking at, let me get back here to our fixed assets, it's not going to match the beginning value because it does take into account our yearly activity. So the original cost on the book value will compare to your ending balance on this report. Now, for the depreciation, this report is a little bit more depreciation geared, but I've still seen the original cost, looked at for this. Um, but for depreciation values, we have life-to-date depreciation right here. The life-to-date depreciation, again, starting depreciation. So when we look at, let me just get back to schedule of change in depreciation, the beginning depreciation on here will compare to the life-to-date depreciation on the book value report. Year to date is going to be this is how much depreciation was calculated for this current year for all of my items, right? This one isn't so direct of a total when you're comparing to the gap reports because it's basically representing it's the continued items, but like acquisitions also have a year to date. So the year to date I wouldn't necessarily compare to anything directly on here. Um, but the total depreciation at the end, the total depreciation would be comparable to the ending depreciation. So mostly like um, life to date to the beginning, total depreciation to the ending. And I have that listed out here. The book value report, or I'm sorry, the book value itself is also on there, book value, and that's going to be calculated, oh my gosh, I'm so sorry, by the original cost minus the total depreciation. So I've got that all noted. I know this is probably like a lot to just take in while we're talking through it and just looking at reports with no real goal. But when you're looking at these reports, and if there's like, say you want to dig into a starting, into like a beginning depreciation and be like, well, the beginning depreciation compared to like a prior year report, if that doesn't look great for some reason and you want to see what makes that up, the book value report can be helpful for that. Um, there are some notes. So this report generates for all items capitalized in the current year. Again, this is a non-GAAP report, so it doesn't have the same like automated filterings on some things. We said give us any capitalized items for this year. If there are items that became capitalized during the current fiscal year, they're going to show on this report. Well, if they have a line on this report, they may have a life-to-date depreciation, and that's going to show. But if you're comparing that to your starting depreciation for the year, it does show in a different spot on the GAAP report. So it could like there are situations where understandably like the life to date depreciation may not be exactly the starting depreciation, but there's a reason for it that's explainable. um so I have a note explaining when and why that may happen. And that's just like basically a difference of how the reports are looking at data. Okay, let's get back here. Book value report. I have some additional non-GAAP reports listed on here. The audit report, honestly, the audit report does get included in the bundle. I know that one can get really big and sometimes it's hard to run. So if you can't, you don't necessarily have to run that one on the fly. Um, the depreciation posting report. So this one is sort of a summary of the depreciation and book value calculations by fund. The fiscal year end balance report it summarizes like all three types of groupings. So like your fund, your function, your asset class breakdown with ending original cost balances for the current year. So those are just sort of some reports that you can run a review, have to save. Those are in, I believe those are included in the bundle as well. And then we get to the fiscal year end procedures. So once you get through all that, um, let me just see. I guess the only other thing I want to say, sorry for the scroll, is in this section, I do have it noted, you know, I mentioned at the beginning, like, I hope this can help provide some guidance. Like, I wanted to put in some notes based on the questions we've had, what we're seeing, and the things you can review. It's not intended to be an exhaustive list. Like, your districts will want to, balance, review what they want to review. I hope that this is just some helpful, like, guidance to get you in the right direction, or if there are certain totals that you're trying to really narrow down. We just have a little bit more meat in here to help you with that, but basically the goal is sort of intending that, they'll get themselves in balance before they proceed with the closing steps. Darby, you think this is going to be very helpful? Good. I hope so. I really hope so. I know that that's a tough time of year when the audit comes around, and I we want to try and help as much as we can. And I know that it's a lot at this time of year, but if we can help prevent, um, then that would be great. Awesome. Thank you, Vicky. Yeah. Yeah, I appreciate it. All right. So we're almost done though. We have a couple more steps here. And under the core fiscal years, you're going to close the current fiscal year period. Let me figure out. So we're going back here, fiscal years. And when you're ready, you would click to close the fiscal year. Um, that it does change the last closed fiscal year in the core configuration. We'll look at that one. And this is when it's going to add the year's worth of depreciation to the life to date depreciation field. It updates the beginning balance fields on the item record and it generates the fiscal year end bundle and sends it to document store. So let's go. I'm just going to go to the configuration real quick. I've mentioned a couple of times, like when we're looking at the item and we see the depreciation on the item and what that reflects is the calculation through the last fiscal year closed. This is where you can see like what date that's based on. So, at this point, 25 was the last year closed. We're in 26, but this just kind of confirms. And when we go in and close 26, this date will get updated. So just some more notes on the fiscal year end bundle. The fiscal year end bundle zip file will no longer be emailed once document storage is set up and connected to district's inventory. If the fiscal year is closed prior to document store being available, it'll still be generated and sent to the email, as in the past. And then in core fiscal years page, create 27, open the year, and make it current to start processing inventory for the new year. So that's the last step on our list. If you are updating your list to be consistent with this, there was some additional text on this last step. If you have a district that is not checked, that doesn't have their gap flag checked, and then they're going to check it in the future, we had like some detail on that. On review, I don't think that's very common. That still would be the same process, so nothing changed with the process. But we just figured as far as the checklist going forward, didn't deem that to be like really necessary to have on that last step. In addition to adding all the stuff about balancing, I also kind of wanted to, I know it can be overwhelming when there's maybe like stuff there that doesn't need to be. So we also just wanted to like keep it as clean as possible. So if you're comparing to your list, yeah, there's some text we took out from that last step, but it's still relevant. It's just not something we thought needed to be noted on the checklist. Um, and that's it for our inventory fiscal year end meeting for 26. So, upcoming training sessions, again, May 22nd, we have SubHub Ohio preview session. June 5th is going to be our May release recap. And then on June 12th, we're going to be doing a session on USAS account change or fund change. Previously discussed as fund change, but cash account change is what we're going with now. Overview. So that's what we got. If there aren't any other questions, thank you so much for attending today. I know these sessions are long. We got everything recorded though, so we'll get that posted as soon as it's available. And I hope you all have a great weekend and happy fiscal year end 26. Thank you.
Amanda.
Thanks. All right, have a good one.
Thank you.